Welcome to our comprehensive guide on how to buy a house for first-time buyers. Purchasing your first home is a major milestone, and it can feel overwhelming with all the steps involved. In this video, we'll walk you through the entire process, from understanding your finances to finally moving in. Whether you're just starting to think about home ownership or you're ready to take the plunge, this guide will provide you with the knowledge and confidence you need. Let's begin by exploring why buying a home can be a smart investment and what you should consider before starting your journey. Owning a home offers many benefits beyond just having a place to live. It can be a great way to build equity over time, provide stability for you and your family, and even offer tax advantages in some regions. Unlike renting, your monthly payments contribute to something you own. However, homeownership also comes with responsibilities, such as maintenance and property taxes. Before you start searching for your dream home, it's important to weigh the pros and cons and decide if now is the right time for you to buy. Before diving into the home buying process, take a moment to assess your personal and financial readiness. Ask yourself if you're prepared for the long-term commitment of homeownership. Consider your job stability, future plans, and whether you're ready to settle in one place for several years. Financially, review your savings, income, and any existing debts. Being honest with yourself at this stage will help you avoid stress later on and ensure you're making a sound decision. Knowing how much you can afford is a crucial first step. Start by calculating your total income, monthly expenses, and existing debts. Lenders typically use a debt-to-income ratio to determine how much you can borrow. Don't forget to factor in additional costs like property taxes, insurance, and maintenance. Setting a realistic budget will help you focus your search and prevent disappointment down the line. One of the biggest hurdles for first-time buyers is saving for a down payment. Most lenders require a down payment of at least 5% to 20% of the home's purchase price. The more you can put down, the lower your monthly payments will be. Start by setting a savings goal and creating a plan to reach it. Consider setting up a dedicated savings account and automating your contributions to stay on track. Your credit score plays a significant role in the mortgage approval process. A higher score can help you secure better interest rates and loan terms. Before applying for a mortgage, check your credit report for errors and take steps to improve your score if needed. Paying bills on time, reducing debt, and avoiding new credit inquiries can all help boost your score over time. There are several types of mortgages available, each with its own pros and cons. Fixed-rate mortgages offer stable payments, while adjustable-rate mortgages may start with lower rates but can change over time. Some government programs are designed to help first-time buyers with lower down payments or special incentives. Research your options and speak with a mortgage advisor to find the best fit for your situation. Getting pre-approved for a mortgage shows sellers that you're a serious buyer and gives you a clear idea of your price range. The pre-approval process involves submitting financial documents to a lender, who will then determine how much you can borrow. Having a pre-approval letter in hand can give you an edge in competitive markets and help you move quickly when you find the right home. Before you start house hunting, make a list of your must-haves and nice-to-haves. Consider factors like location, size, number of bedrooms and bathrooms, and proximity to work or schools. Knowing what you want will help you narrow down your options and make the search process more efficient. With your needs defined and budget set, it's time to start searching for homes. Use online listings, real estate apps, and local agents to find properties that match your criteria. Don't hesitate to visit open houses and schedule private showings. Take notes and photos to help you remember each property and compare them based on your priorities. A knowledgeable real estate agent can be an invaluable resource, especially for first-time buyers. Agents can help you find suitable properties, negotiate offers, and navigate the paperwork. Choose an agent who understands your needs and has experience in your desired area. Don't be afraid to ask questions and make sure you feel comfortable with their communication style. Open houses are a great way to get a feel for different properties and neighborhoods. Take your time to explore each home, ask questions, and imagine yourself living there. Pay attention to the condition of the property, layout, and any potential issues. Don't rush. This is a big decision, and it's important to gather as much information as possible. The neighborhood you choose can have a big impact on your quality of life and future property value. Research local amenities, schools, crime rates, and transportation options. Visit neighborhoods at different times of day to get a sense of the atmosphere. Talk to residents if possible, and consider your long-term plans when making a decision. After visiting several homes, it's time to compare your options. Create a checklist or spreadsheet to rate each property based on your priorities. Consider factors like price, condition, location, and potential for future growth. Don't rush this step. Take your time to weigh the pros and cons of each option before making a decision. Once you've found the right home, it's time to make an offer. Your real estate agent can help you determine a fair price based on market conditions and recent sales. Be prepared for some negotiation, as the seller may counter your offer. Stay within your budget and don't let emotions drive your decisions. Once both parties agree, you'll sign a purchase agreement to move forward. When your offer is accepted, you'll typically need to provide an earnest money deposit. This shows the seller you're serious and is usually held in escrow until closing. The amount varies but is often 1% to 3% of the purchase price. If the deal falls through for certain reasons, you may get your deposit back. Otherwise, it goes toward your down payment or closing costs. A home inspection is a crucial step to ensure the property is in good condition. Hire a qualified inspector to check for issues like structural damage, plumbing, electrical systems, and more. The inspection report will help you decide if any repairs are needed or if you want to renegotiate the offer. Don't skip this step, it can save you from costly surprises later. Lenders require a home appraisal to ensure the property's value matches the loan amount. An independent appraiser will evaluate the home and compare it to similar properties in the area. If the appraisal comes in lower than your offer, you may need to renegotiate or cover the difference. This step protects both you and the lender from overpaying. After the appraisal and inspection, it's time to finalize your mortgage. Submit any remaining documents to your lender and review the loan terms carefully. Make sure you understand your interest rate, monthly payments, and any fees. Once everything is approved, you'll receive a closing disclosure outlining the final costs and terms of your loan. Most lenders require you to have homeowner's insurance before closing. This protects you and the lender from losses due to fire, theft, or other damages. Shop around for the best rates and coverage, and make sure your policy meets the lender's requirements. Having insurance in place is an important part of protecting your investment. A title search ensures there are no legal issues with the property's ownership. Title insurance protects you and your lender from future claims or disputes. Your closing agent or attorney will handle this process, but it's important to understand what's involved. This step provides peace of mind that your new home is legally yours. Before closing, you'll receive a closing disclosure that outlines all the final costs, including loan terms, interest rate, and closing fees. Review this document carefully and ask your lender or agent about anything you don't understand. Make sure all the details match your expectations and previous agreements before signing. As closing day approaches, make sure you have all necessary documents and funds ready. Double-check the closing disclosure, arrange for a wire transfer or cashier's check for your down payment and closing costs, and confirm the time and location of your closing appointment. Being organized will help ensure a smooth and stress-free closing. Before closing, you'll have the opportunity to do a final walkthrough of the property. This is your chance to make sure any agreed-upon repairs have been completed and that the home is in the expected condition. Check appliances, fixtures, and systems to ensure everything is working properly. If you notice any issues, notify your agent immediately. Closing day is when you officially become a homeowner. You'll sign all the necessary documents, pay your down payment and closing costs, and receive the keys to your new home. The process can take a few hours, so be prepared to review and sign multiple forms. Once everything is complete, congratulations, you're now a homeowner. With the keys in hand, it's time to prepare for your move. Create a moving checklist, schedule movers, or rent a truck, and start packing your belongings. Notify utility companies, update your address, and arrange for any necessary repairs or cleaning before moving in. Planning ahead will make your move smoother and less stressful. Once you've moved in, take your time unpacking and getting settled. Start with the essentials and gradually organize each room. Meet your neighbors, explore your new community, and make your house feel like home. Remember, it's normal for the adjustment period to take some time, so be patient with yourself as you settle in. Owning a home comes with ongoing costs beyond your mortgage. These include property taxes, homeowner's insurance, utilities, maintenance, and repairs. Set aside a portion of your budget for unexpected expenses and consider creating a home maintenance schedule to keep everything in good shape. Being prepared will help you manage your finances and protect your investment. As you make mortgage payments, you gradually build equity in your home. Equity is the difference between your home's value and the amount you owe on your mortgage. Over time, as property values increase and your loan balance decreases, your equity grows. This can provide financial flexibility in the future, such as borrowing against your home or selling for a profit. Regular maintenance is key to protecting your investment and avoiding costly repairs. Create a schedule for tasks like cleaning gutters, servicing HVAC systems, and checking for leaks. Address small issues promptly before they become bigger problems. Keeping your home in good condition will help maintain its value and ensure a comfortable living environment. Property taxes are a recurring expense for homeowners. The amount you pay depends on your home's value and local tax rates. These taxes fund community services like schools, roads, and emergency services. Make sure you understand how property taxes are calculated in your area and budget for them accordingly. Some homes are part of a homeowners association, or HOA. HOAs manage common areas and enforce community rules. They charge monthly or annual fees, which cover services like landscaping, security, and amenities. Before buying, review the HOA's rules and fees to make sure they fit your lifestyle and budget. Over time, you may want to refinance your mortgage to get a better interest rate or change your loan terms. Refinancing can help lower your monthly payments or allow you to access your home's equity. However, it's important to weigh the costs and benefits before making a decision. Consult with a mortgage advisor to see if refinancing is right for you. Homeownership can offer tax benefits, such as deductions for mortgage interest and property taxes. These deductions can help reduce your taxable income and lower your overall tax bill. Consult a tax professional to understand which benefits apply to your situation and how to maximize your savings. Protecting your home is essential. In addition to homeowners insurance, consider security systems, regular maintenance, and keeping records of improvements. These steps can help safeguard your property and increase its value over time. Being proactive about protection will give you peace of mind as a homeowner. Repairs are a normal part of homeownership. Whether it's a leaky faucet or a broken appliance, address repairs promptly to prevent bigger issues. Learn basic DIY skills or have a list of trusted professionals for more complex jobs. Staying on top of repairs will help keep your home comfortable and valuable. Home improvement projects can enhance your living space and increase your property's value. Start with small upgrades like painting or landscaping, and consider larger projects as your budget allows. Always research the return on investment for major renovations and choose improvements that fit your needs and lifestyle. Being prepared for emergencies is an important part of homeownership. Create an emergency plan, keep supplies on hand, and know how to shut off utilities if needed. Consider installing smoke detectors, carbon monoxide alarms, and a security system. Preparation can help keep you and your home safe in unexpected situations. Even if you plan to stay in your home for many years, it's wise to consider its resale value. Factors like location, school districts, and home condition can affect how much your property is worth in the future. Keep your home well maintained and make improvements that appeal to a broad range of buyers to maximize your resale potential. Keeping your documents and records organized is essential for homeowners. Store important papers like your deed, mortgage documents, insurance policies, and receipts for improvements in a safe place. Staying organized will make it easier to manage your home, file taxes, and handle any future transactions. Safety should always be a priority in your new home. Install smoke and carbon monoxide detectors, secure doors and windows, and keep emergency numbers handy. Regularly test safety devices and update your emergency plan as needed. Taking these precautions will help ensure your home is a safe place for you and your family. Getting involved in your community can enhance your homeownership experience. Attend neighborhood meetings, participate in local events, and get to know your neighbors. Building strong relationships in your community can provide support, security, and a sense of belonging. Homeownership is a long-term commitment. Set goals for your property, such as paying off your mortgage early, making improvements, or planning for future moves. Regularly review your finances and home maintenance to stay on track. Long-term planning will help you make the most of your investment and enjoy your home for years to come. It's easy to make mistakes as a first-time buyer, but being aware of common pitfalls can help you avoid them. Don't skip the inspection, overextend your budget, or rush into a decision. Take your time, do your research, and seek professional advice when needed. Learning from others' experiences can help you make smarter choices. Congratulations on taking the first steps toward homeownership. Buying your first home is a journey filled with excitement, challenges, and rewards. Remember, preparation and knowledge are your best tools. Take your time, stay organized, and don't hesitate to ask for help along the way. With the right approach, you'll soon be enjoying the comfort and security of your very own home.